Most people think financial freedom is about how much you earn. Guess what? They're wrong. It's about how much you keep and how you protect it. Today, we're breaking down the steps to make your money last as long as you do. Hi, I'm Sandy Bobal-Zuniga, the founder of Colorado Springs Town Tidings. Be in the know on the go for all things Colorado Springs, delivered right to your inbox. Today, I'm joined by financial educator Renee Lawrence. She's here to simplify the world of insurance and wealth planning, giving you the tools to turn financial confusion into a clear path forward. Renee, thanks for joining us.
Thank you, Sandy. I'm really excited to be here.
Yes, I am too. I have a lot of questions. And before we actually dive into the strategy, I'd love to know a little bit about your story. Where are you from and how did you get to Colorado Springs?
Well, I'm from California, and so actually, long story short is that my son and daughter-in-law had a baby. My husband and I had been taking care of my mom for 2 years before she passed, and I wanted to live closer to them. And they decided they wanted to move out here to Colorado Springs, so we all packed up and moved on out here. Been here for about 5 years now, and absolutely love it.
Oh, wow. So that's a little interesting as a lot of people, and I am not one of them, that come by way of military, and you guys did not.
Right? Right.
So what brought them to Colorado Springs as opposed
Um,
to anywhere else in the country?
well, anywhere in California, Southern California particularly, it's very, very expensive. And they wanted to buy a house, and they could afford to buy a house, but they'd be house poor. And so they really were thinking about moving someplace where, they could buy a house and not have to worry about making those payments. They had been told by friends that Colorado Springs was a really great place. They came out to visit and came back, said they loved it. I said, let's go. And here we are.
That was similar to my origin story on how I got here too, so I can totally relate. And how old are is it one grandchild so far?
I have two,
Okay.
two. One of them is 7, and the other one is 8 months.
Oh, wow, a
Yeah,
newbie.
yeah, they're fun.
Yeah, absolutely. So, what in your life, what kind of work did you do, careers, things like that? And then what got you to what you're focused on today, which is the financial education in general?
Well, I've had many different careers in my lifetime. But the main career that I had was I went to school to become a child educator in early childhood education. And so for me, that was really important. I love kids and I love working with them. So I did that for about 22 years. I went through that not only as a teacher, but I became a director, site supervisor of running programs, mainly for Head Start.
Okay. And so you were in education, but it was childhood education.
Yes, yes,
Okay.
yeah.
So connect the dots for me. How'd you go from that to educating families, parents, elderly, adults in general on, and specifically on their financial um, wealth and other things for their life?
Well, I'd stopped working in that field because I got hurt on the job. And so at that time, um, not being able to work, and then my mom, she started to fall ill. And so I just in that time decided that I needed to be there to take care of her. And so my husband and I were with her for, taking care of her the last 2 years of her life. And we moved out here to Colorado Springs. I watched my grandson until he started kindergarten while my kids were working. And then after he went to kindergarten, I was sitting there going, okay, now what? What am I doing? What should I be doing? I had no idea. And at the time that I started this, I was already retired. So looking back at it, I look and I see what a lot of people are going through is you look and you think, well, how am I going to make it through the rest of my life? And so when this came along, it fascinated me because not only could I help myself, but I could help other families that are going through the same thing. And so that became priority for me. And that's why I'm doing this now.
So it was a personal struggle and what you
Yes,
were going through that basically you said there needs to be a better way. And as I'm figuring it out, maybe I can be the better way.
absolutely.
Okay.
Yeah,
And that those are the best kind. Sometimes we have professionals that know a subject, a product, a service from the outside in, which isn't bad because that's a different perspective. But when you're actually in the weeds of things and boots on the ground, as they say, then you've got a different perspective. You know what the reality is, not
right.
just the textbook.
Right. And so basically, in this, why I started this, because that was my reality. My reality was looking for my future, for my husband and I. What is it that we're going to do? And how are we going to do that? And then knowing that I could help other people too was the biggest blessing.
Right. And I think we all struggle with the financial part of our lives in general. We just don't know how long we're going to live. And there used to be a time back in the day when you would do all the things right. You would graduate high school, graduate college, get a degree, go into a business, a career, something. If you were lucky enough to get a single company that will take you until retirement, great. That does, I don't even think that exists anymore. I think in my generation, Gen X, I think that started to fall apart. And I
Right,
think the baby boomers had more of that. And then Gen X, that was, we were switching jobs every so often. There were layoffs, so many layoffs.
right,
There were so many things going on. So that wasn't the case. So you couldn't bank on a company's insurance, any kind of pension if you were actually in an industry that had one. And also retire from a company with a robust 401k because they were also putting money into it for 40 years or something like that. So the world has changed since then. And what we need financially and as far as um, our not only our money, but our sense of um, safety net and all that, I think has changed because now it's more up to us, I think, than relying on any kind of company to be that safety blanket or that safety net.
yes, absolutely. And that's one of the things that I'm finding as I'm going through this and meeting different people and seeing what their different needs are, is that most of them are in that workspace where they haven't been able to save because they don't know how to. And so it's kind of one of those things now, like you said, that most people aren't working for years and years and years for a company, and they don't have that security of having, a pension or, those types of things that can help them through their later years.
Right. And so looking at that, and we'll touch on the different aspects because it's not just a paycheck
Right.
and saving money. There are a whole myriad of things that we need to consider. And I always say, tomorrow isn't promised. We don't know if we'll be here tomorrow. And yet we still have to plan for being here for, I don't know how many years.
Right.
We could live to 100. You never know.
You never know.
And that's what we need to kind of prepare for and the state we may be in as we get older, because
Absolutely.
it's not always you get sick and then you're gone or something happens. Sometimes it's a long progressing possible disease if that's it. Or even if you're healthy and you're going long, you're out, you're in retirement age and Social Security isn't cutting it, and you still may have 20 more years. You just don't know. And that's what you're here to open up the possibilities and what are the things we might consider.
Right. Absolutely.
So, what is one truth over the time, basically decades in general, because you've seen a lot that's gone on.
Yeah.
What's the one truth about money that maybe hasn't changed in decades, but people still struggle to grasp?
Well, one of the things that I have found is that there is not really a financial education in how to plan for your money. So when I talk to people, they're surprised when I talk to them or educate them about their money and what it is that they can do with it. They ask, why didn't anybody tell me? And so that's one of the things that I find from everybody that I talk to.
And so, just to be clear, you're not a financial advisor. There's a whole group of people who do that. And so, can you narrow it down a little bit on what your specialty? It's education, but it's education on which parts that could be helpful that we're
Right.
missing.
Right. So, when I'm talking to somebody, I want to get to know them and get to know their families and find out what it is that they are wanting to plan for their future, or even if they know. So we sit down, we go through different types of questions, mainly about finances, which is really hard for people. Most people don't want to talk about their finances, or they're embarrassed because, they haven't been doing what they think they should be doing. And so basically just sit down with them and provide a plan for them. And all this that I do with them is completely free of charge. And so they get a 15-page printout that shows them where they are now, what they need to be doing for the future, for their retirement, if they want to plan for their family and leave something for their family. So those are all the things that I work with them, and I find out what it is they need, not what other companies want to tell them to do. And so it's purely on what it is that they're interested in having put forth for their family, and I help them do that.
And so it could be anywhere from like your kids where they are younger and they have younger the babies
Hmm.
and children, all the way up to the Gen Xers or even baby boomers who are already in retirement or somewhere in between. Then we also have um, all the generations in between. I guess it depends on where they are, what their family situation is.
Yes.
It could be that it is married couple with kids. It could be
Hmm.
married and no kids. It could be single. It could be change of life. It could be anything because at any particular point in your life, you basically have to reevaluate your financial situation because things have changed.
Things change, absolutely. You never know what's going to happen from day to day. And I've seen so many people that have learned about this and said, "Oh, I wish I had known about this because so and so could have done this." Or, so basically it's just that giving them that education, showing them what it is they can do and asking, what they want for their future.
Right. And so you've got options for them depending on what they are looking for their future and
Yeah.
maybe have not even thought about what their future could be. And
Right.
so I think that that's kind of where you come in is what are the possibilities and what are the things I should be thinking of And then how could that help if they decided? So let's go ahead and talk. One of the things you and I both have discussed in the past is kind of an insurance reality check, as
Yes.
I would say. And most people think that insurance is just another bill to pay. And how do you help people shift their mindset from buying a policy to building a safety net for themselves long term?
Absolutely. And that's one of the things that we do as far as looking at their finances. We have people that say, well, I just can't afford it, but they're buying Starbucks every day. So it's just a rearranging of where your money is going and how to save and plan for that future. So yeah, there are different types of policies. There's something out there for everyone, and it isn't another bill. It's a plan for your future, basically, is what that is. So, regardless of whether it's you're looking for a future for your retirement, if you're planning a future that you want to make sure your family is taken care of if something, happened to you. And so just and many other things that we do within that to help families. Um, how to, invest in something without having to pay taxes or losing your money if the market drops. There's just so many different things to be able to think of out there.
Right. And to kind of put it in perspective, I've got a few personal stories, and then so do you. One is I was going along with my life, and it was my early 40s, and all of a sudden I was diagnosed with cancer. And it was like, what the heck? But before that, I started my own business a couple years before, so self-employed, and my husband was unemployed, and we had to. I always knew. I always worked for a corporation, or my partner was working for that we got insurance through there. And as I grew up, that was the big thing. You had to get married because if somebody was working, then at least you got insurance, which is not the right reason to be married. However, that's what happened. And
Yeah.
so that situation of being self-employed, which I never thought I would be, it was never on my radar, it just happened to be, and not having a partner who was bringing in a corporate insurance, I panicked and I had to go through the state and find out about insurance and trying to get brokers and all. It was a mess.
Yeah.
But we did that, and somebody told us about short-term health insurance.
Hmm.
And I'm like, what the heck is that? We did get a policy. And unbeknownst to me, a couple of years later, again, still unemployed, I'm self-employed, and I got diagnosed. And now the bills, the treatments, all that stuff was like, what the heck?
Right.
Um, and so he wound up getting a job just to get a job to get insurance, which helped a bit. But because of that policy, I think it was $10,000 or something. I forget what it was, but I was able to get reimbursed or get that money because that went to the cancer treatments, the surgeries, the the treatments that I won't even go into. But all of that was an expense that we did not plan for. I didn't even think I would have to, I was too young to, what the heck is this? And so having that insurance policy helped. The problem is, and so there's always consequences no matter what. The consequence to that was at the time I got some money to reimburse for the extra, because even with corporate insurance, the deductibles are ridiculous. We've got a $10,000 deductible. Who's going to hit that? I mean, if you have surgery and stuff, but who's got the $10,000 to even put in it? It's ridiculous.
It is.
So my consequence of calling in that policy, which I needed at the time, is then I have been denied for life insurance.
Yes.
I could not get another short-term insurance or anything because I had used it. And also I had cancer and all of that. So now it's a whole other can of worms there that it's
Yeah.
just like, what? So you could, I'm assuming, help with those situations. So that's one situation that we'll discuss. And then the other is as as we age, you and I both talked about this. We are seeing more things like dementia and Alzheimer's and and families, if they are lucky, well, I don't know, if they have families,
Yeah.
some of them are maybe not in the retirement age. They're still working. They're still trying to make a living. And now they have to put their life on hold because now they become the primary caregiver.
Yes.
Now they can't work outside the home and care for them. And even with the state cutting the home health care budget
Yeah.
and reimbursement on some stuff, which does not even cover the costs of actually staying home
Yeah.
and caring, but even that little any little bit helps. So you've got all of that and people they don't have the money to go into homes or put their people their loved ones into a home
Yes.
and stuff. So that's a whole other thing. And having there are insurance policies that you can get that will help with that people don't know about because we haven't run into this. I think this generation now is running into it more than my parents' generation. So it's
Yeah.
something new. So let's talk about all of that.
Okay. Yes, and actually I do have an experience with that. One of the things that got me to doing this too is called long-term care. And so it's part of something that you can get within any policies that you're interested in. And long-term care is there for you. That so if there's something like, for instance, they have six different classes of what you can or can't do. Like, for instance, if you can't dress yourself, if you can't feed yourself, can't take a shower, with two out of six of them, if you can't, you can get long-term care if you plan for it. And so what happens is that policy will pay out to you to help you with the financial part of caring for somebody because it can be very extensive. Um, and nobody thinks when they're younger, I'm going to need long-term care. Oh, when I'm older, I'll use it. But I can tell you right now that I have a family member that almost 2 years ago dove into a pool. She was 26, broke her neck, and became paralyzed. She didn't have anything to take care of herself. You don't think at those times that those things are going to happen. So, yes, then my sister had to stop working to take care of her. She went through all that red tape trying to be a caregiver for her, then all the therapy that her daughter needs. And so, that's the tough part of that. We never know when we're going to have an accident. We never know if anything's are going to happen, and it's not just for when you get older. So that's one of the things that is out there that people don't know about.
Right. And this is where your finances on the financial education is you're earning money, and then where are you putting it for not only today and obviously for your groceries and things like that, but where is it that you can move some for whatever your goals are? And insurance, some people say it's a racket, and some people say it. We just never know. It's
Right.
there. I'm assuming, and I kind of make it as a safety net.
Yeah.
We put money into it, and hopefully we never have to use it.
Right.
But if we do, then that's when we're not kicking ourselves, just like that short-term health insurance or whatever
Yes.
policy I had. I didn't ever expect to use it. And
Right.
here I was a couple of years later and I had to call it in.
Right. And it is that It's that feeling of financial freedom at the end of the day, that you know that if something happens, that you're going to be taken care of or your family is going to be taken care of, and you don't have to worry about that. That's probably more of what I see with people is that they wish that they would have planned if they had known. And so that's the hard thing about it, is seeing that, um, so many people are unaware, and but are, that I'm able to show them different ways that they can, have their money work for them. You work hard all of your life, you don't want to go to part of your life and say, oh my gosh, I don't know how we're going to take care of this, or somebody becomes disabled. How are we going to pay our mortgage? Those kinds of things happen. And it's hard, and it's very sad to see that.
Right. So what do you do when you're talking to somebody? There are different insurance policies that you talked about. Obviously, the long-term care policy, and so touch on a few of the others. And what are the ones that most of us don't think about and probably would not even fund, and why we should consider it?
Right. Well, basically, what we do is that in that education piece, we show them different ways of saving your money. How, you don't really earn any money in a savings account in a bank. How, if you are in the stock market, your money is going up and down and up and down, and how you can actually put your money into a plan that is in the market but doesn't lose when the market goes down. Doesn't sound like it's real, does it? It's absolutely real. And so basically those are the kinds of things that we show them, and we show them how that compounding interest grows over the years, and to, from basically where they started just putting money in to how it's grown 20 years later, 10 years later, and that they can actually take money out of that, a certain percentage of it out without being taxed. I mean, that's the one thing that we always know is going to happen, is death and taxes. Those are
Yep.
the hard things. Those are the ones we don't want to hear. And so we know that it's going to happen. So how can we plan for that? We plan for weddings, we plan for babies coming, we plan to buy a house, but we don't plan for our future. And that's the hard reality of what I'm seeing.
Right. And so which policies are you, as far as like insurance, which are the ones that are the most needed from the people that, from your experience and the people you've talked to, that we don't usually even think of?
Um, I think that's that planning for retirement. And so it's that plan where you're putting your money in, your money is compounding, and you can see that growth. Whereas when you put it in the bank, you don't really see anything growing, and 20 years later, you haven't really saved much of anything in that. So it just is also too, it depends on the person that I'm talking to, what it is that they're looking for, how they want to plan for their family. And so um, it's a case by case basis. I can't say any particular plan because there's so many good ones out there. It's just what that person, what we discuss, and what they feel is the best for them.
And so there are different insurance policies out there.
Hmm.
And I know there are some that you put money in
Hmm.
for the full time you have the policy.
Hmm.
And if you stop it, you've lost all that money and everything. And yet there are other policies that are similar. However, if you stop it, then you get percentage back, some
Yes.
back, or something like that. So you're not, so you have to be careful on what you choose as well as choosing in general.
Absolutely. You're absolutely right, Sandy. And that's one of the things that in the education piece is that I tell them the difference of, are you looking for a permanent insurance? Or are you looking for a term insurance? And most people don't even know what the difference in that is. And so
Right.
that term insurance is that a plan where you pay for it for a term. If you don't use it, you lose it. There are some that actually have where you can put your term insurance into another plan. Some people can afford to have anything more than a term insurance for the time being, but then as they're earning a different income or as they're budgeting more wisely, they can actually put into a plan where it's actually earning money for them, and they don't have to worry about, that it's going to cancel and I'm not going to have this, and I put this money into it. So we talk about the different areas of the this versus this. We're going to put this much money in. It's lesser, but it's not going to be something that you're going to be able to look to for a long term. And then the other is, well, this might cost a little bit more, but this is going to be something that you'll be able to do and have in your lifetime.
Right. And also it besides cashing it out because
Right.
whatever it's used for is needed at the time, whatever it is, if circumstances change, you've got them on the right policy where they can either draw from it and pay it back, or they can, if they cancel, they get whatever money back.
Yes.
And so, as opposed to like the stock market, like you said, that goes up and down,
Right.
it is something you know is there, and so you're not, it's like a holding pattern for your money,
Yes.
and you know it's there, and it has a benefit if you need to use the policy, and if you
Right.
don't, you're still getting that money back. So it's money you're allocating for it, and yet later on, as opposed to like a 401k where you, if it's not a Roth, you are having to pay taxes on it if you want to use any of it. And you're, that's quite a bit you're losing
Yep.
just to pay taxes, just to use your own money.
Right, absolutely. And so what I also say is that, people that are investing in the stock markets, they don't have really an issue with losing their money. However, that's pretty sad for me to hear because you can actually earn and instead of investing in the stock market, investing in yourself, you know,
Right.
and investing in your family, looking at it that way. It's not about something that there's another bill to pay. It's about something that I'm putting into for my future. And also, we have ways of helping people that have an old 401k and they don't know what to do with it. And so we have different ways of rolling that over so that they too can be making money off of that and not worried whether that's going to be there for them or if, the stock market is going to crash. And, we've seen the fluctuations and we know that it happens. We've been very lucky recently, that it's been doing pretty good. But yeah, I don't know what happens for tomorrow. And so, I've had numerous people that have had 401ks and are just like, oh my gosh, I'm so glad that I was able to do that because now I don't have to worry about having to pay taxes on that money. Because what people don't understand is when you take money out of your 401k, not only are you paying a penalty, but the following year, Uncle Sam says, "Oh, you earned this money." So we're going to take taxes out on that. And people do not realize that is what happens. They just think, well, I put it into 401k, I should be able to use it. They don't
Right.
understand it will be taxed. And so that's also part of the education piece is showing people what they can do with limiting, the amount of taxes that they have to pay, or, having plans that there is no tax paid on it, when receiving it. So there's so many different things.
Right. And so, as far as insurance, and this probably will wrap up the insurance part of it. With insurance, there are different plans for different needs of different stages of your life, correct?
Absolutely. Absolutely.
So that's why we can't do anything blanketed. There's everything from health insurance stuff to life insurance to long-term healthcare, health workers, and everywhere in between.
Yeah.
And what I picked up what you said before was there's term policies, and then what's the other word for it?
Permanent. Yeah.
Permanent.
Permanent
Term,
insurance. Yeah.
term and permanent. And with term is what I was talking about before, where you pay into it, and then if you cancel, all that money you paid into it just goes away and you never see
Absolutely.
it again. And permanent, even though it's more expensive, or a little bit more, and that may be relative. You
Right.
know, what's
Right.
expensive to me may not be to you, and vice versa.
Absolutely.
So for that, however, with that, then with whatever circumstances happen, there's a possibility if you need to cancel, you can get that money back, or some other things. And I think that with that kind of safety net, that is, I think more people are open to insurance.
Right.
The term ones are just difficult because even in my own brain, I just cannot reconcile with that, just giving my money. And then there are times, even in my life, that I had to cancel, and it's like that $40 every month that I did for 5, 10 years or something now is just, I basically threw it out the window.
Right.
I don't like that.
It is. It's very frustrating. And what I have found is that most companies will just say, just get this, get this plan, it'll cover you. And there's no explanation. There's no education in it. And there's no what I think is like building a trust, building trust with the person that you're helping, because to me that's extremely important. And so when I see other people that, well, they just told me to do this.
Right.
I feel so bad because they don't know. They don't know. And that's where I come in. That's where I'm helping them to choose what's best for them and to always make sure that if you have questions, please come to me. Don't just cancel the policy. Talk to me. Let's see what we can do to, work the best out for you.
Right. And then there's also, you had said there's some term policies that could be rolled up into a permanent, so
Mhm.
you're not losing that money,
Absolutely.
but but there, that's not disclosed usually, and there's no longer term, there's no strategy for it. So if they come to you, you're going to make sure that they know, and that they know the different policies, that if they need the term because it's less costly per month, or something,
Hmm.
that the bigger picture is to go to permanent. And if you set up in this particular um, policies or companies, that right now these can go into the other, as
Absolutely.
opposed to just going into a term, and now that never had the opportunity or ability to be rolled up,
Right.
and you've lost.
Yeah, I will never do that. Every time I talk to a person, I will tell them that, let's look at this in another 6 months and see where you are financially and see what we can do to get you a better plan so you don't have to worry about this. And then that way they know, I'm going to be paying this for 10 years, for 20 years, whatever. And the possibility of losing that money, where could that money have gone to instead of just, putting it to something that you might not ever use.
Right. And that, even with when I was choosing insurance, again, it was the right move, obviously, with unbeknownst to me of what was going to happen in a few years.
Right.
However, I was never told about any of this stuff, short term or term, permanent, or anything like that. And it wasn't until later, when I had to call the policy in, that I found out about the other repercussions of it. And okay, so if I got another policy or my partner had a policy and okay, I just went through that. Well, what if that happens on that side? We need it for that. And yet 10 years later, 15 years later, okay, we're still paying this. Is it worth it? And we lost all the money for whatever 15 years that we were paying or 10 years. And that did not feel good. So it would have been good to know and be set up where, okay,
Absolutely.
we may not need it but if we go into a permanent one, we'll spend a little bit more, but all that money for 10 years, $40 a month now can at least go in there and we haven't lost that.
Absolutely. And that's one of the things too, is that I think that when people think, well, you're a financial person, you should know, you're going to let me know what's the best, but not really. Do your due diligence. Find out what company that you're looking at and that can do it. I'm really fortunate that I don't just do my business in Colorado Springs. I do business throughout the whole United States. So that is, and I work with insurance companies in every single state. So that's the thing for me that is wonderful. I don't have to rely on, one company and then this is what they offer. I have hundreds of plans and hundreds of insurance companies that I do business with, and I find out I work for my client, not for the insurance company.
Right. Yeah. And some people just they don't have the capacity or the time or whatever to do all the education, go research and do your due
Right.
diligence. Although it's great to say do it, and we all should,
Yeah,
and yet reality comes in and we don't have the time. We kick ourselves later. So I feel personally having someone like you kind of helping along and knowing, and also will do the due diligence on our behalf and report
absolutely.
back. That just makes everything so much better. And then we can go ahead and look, but you're at least condensing it enough
Yes.
to here's the information. So helpful.
Thank you. Yes, I love it. I absolutely love it.
Okay, so now we are going to switch topics into one that I have plenty of questions and is something people do not think about
Hmm.
and apparently should. So I have a friend who highly, highly recommends everybody do a living trust. And that makes my head spin. And I'm like, what is it? But from everything from a family legacy
Hmm.
to helping with your taxes or keeping your money and just a better way. I don't know if it was Rich Dad, Poor Dad or whatever back in or Napoleon Hill. I'm not quite sure which ones. Way back when that was basically what they were trying to get. But I think Rich Dad, Poor Dad, I think he goes around these routes on how to keep more of your money and basically own nothing. Living wills are kind of a complicated um, topic, but it got me thinking. And so I was told I'm reading this book.
There you
It's
go.
the only living trust book you'll ever need. And I'm almost halfway through, but look at all these tabs I got here. I've got
Yes.
all these questions. The color coded, like the red are the ones that I definitely need to, make sure I go back to. The yellows are the questions. I mean, all kinds of things. So we can't go into all of the living trust things on this interview, but let's go the highlights. What is a living trust? What's the benefit? And who could benefit most?
Okay. Well, so living trust is basically something that you set up, not you yourself, but I set up living trust for people, and I work with lawyers who take care of this. Now, a lot of people are looking at, well, I can do, this on trust and will, but the part of that is that the follow through in doing that, and most people won't follow through because it's extra work they have to do. So what I do is I help and guide them into what it is that if you've got real estate, if you've got family, if you've got, let's say that you got an inheritance, those kinds of things, property, anything that you have that is val of value that you want to leave for a family member. It's best to have a living trust. I'll tell you the difference between a living trust and a will. The living trust is a legal document. It cannot be changed unless it's changed by the person that created the living trust. And you can make changes, but it has to be that person that created it. And so, for instance, my mom had a living trust. When she passed, everything was cut and dry in that. There was no argument about it. Everything was taken care of exactly the way she wanted to. Now, with wills, what happens is that if you have a will, whatever you put on your will goes into probate. And so what will happen is that the state will take care of your probate, which means they'll get paid from the will that was left from, from your family. And so my husband, his dad had a will. And so then his sister, my husband's sister, was in charge of the will, and everything had to go through probate. And it took over a year for anybody to get anything from what it was that he wanted. And so the thing is that looking at that is that do you want to leave your family having to go through the whole process of a probate through a will, or do you want your family to just have a living trust, which is legally binding contract, and know that everything's going to be taken care of exactly the way that you want it?
So there are a few things that I've come across when I've talked to a few people is the whole probate um, issue. I'm not running into a bunch of people who had to go through it, so it's good that you had that experience. It seems like people think, okay, that only happens when there is no will, or if there's a will, that's all that needed. I run into people who say, "Oh, well, I had a friend whose husband died or whatever, and all she had to do was show the death certificate, and then everything came to her." And so I've gotten that a lot, and
Yeah.
I'm like, "Okay, so what am I missing here?
Yeah,
It can't be that simple."
it's
I,
not.
I unless it's so say it's a house, a mortgage, and they were both on it, maybe showing the death certificate, maybe that's where it go, okay, well, it's yours. But if your name's not on it,
Yeah.
and it's just, then that's a problem. Or maybe it's just bank account or something like that, just showing the debt. So it may not be the full picture.
Yeah, absolutely. And so one of the things that, like I said, that I've learned is that for the living trusts, that it's taken care of. Most people don't know anything about either one of them, wills or living trusts, and so they think that a will satisfy what it is that they want. But unfortunately, it doesn't. If you're married, or like for instance, I have a friend that her mom just passed before they were able to get her trust done. It was very unexpected, and she had a will. And so three of them, siblings are now fighting over what, that mom has left. And in the will, it states things, but the state says, well, wait a minute, we're going to have to take a look at this. So a will does not guarantee that your wishes are going to be taken care of. The state gets involved in it, and
No matter what.
no matter what.
Really? So somebody passes away, uh, and they, however it is recorded to the state, and then what, I don't know if you know this, but or not, but what happens at that point? Is that a trigger to the state saying, is there a will or is there not?
Well, you have to, the state will get a death certificate stating that this person passed, And then if you have a will, then once you do that, they want to know, well, who owns the house, who's taking care of what. And so the will shows where the money's supposed to go. But what happens is the state takes care of that whole thing. And then once that is all taken care of, say for instance, these three siblings want to continue paying on the mom's house, which they can now do that, but the state is saying, you know, this is what you have to pay every month. If mom left any other types of funds, she did have um, a life plan that she had left. And so going through all of that and who's getting what and how does that happen and when does that happen? So it is a very costly mistake that people make in that. And wills are, they tend to be around. I'm not sure, most other companies, but a good plan tends to be around $1,800. And most companies will take payments for that. I know the company I do business with does. And so part of that is just thinking for yourself, what do you want to leave to your family? Do you want to leave, this thing, everything that's cut and dried? This is how the money's divided. The house will be sold, blah, blah, blah. This is the person in charge, or, the will. And so, that is one of the things that I've learned. And because I had no idea either before. And so I was just thankful that my mom had the trust and, it just was cut and dried, and it was taken care of within 2 weeks. So,
But did your mom create the trust or
yep,
was it for,
yep.
so she already was already schooled in a sense
Yeah,
of,
she did. She had to take care of her parents that were ailing. And so they had property, they had, a home, they had stocks and everything. And so she, had gone to a lawyer and said, what do I need to do? And this is what he said. And so from that, then she and her husband, my mom and her husband had said, okay, we need to do this too, so that, when that time happens, everything is taken care of. And it's just, I have not seen a family member that has passed where all the siblings are like, oh, no problem. We'll take care of it and we'll all be happy. And it's always usually there's always something. There's always somebody in the family that just is not happy with the situation. So with a trust, there's no arguments, there's nothing, that to do to change that.
well, hopefully, and hopefully it's not for a long, long time, but my dad is getting up there and we don't know. I think he's got a will, not a trust. I know he doesn't have a trust. And hopefully I'm going to be the family that is different. My
Right.
brothers and I that, whatever, and that we can work together and it'll be what it'll be. But that's sad
It
and I
is.
know there are definitely, and it's not necessarily just the children too. There are people that come out of the woodwork and it's just like, you
Right.
don't have any claim here, and yet there's some kind of loophole or something,
Yes.
or just to make things miserable. So now, do you have a will since your mom, I mean, a trust since your mom did that because of her parents? So is it going to the generations?
Yeah, absolutely. Yeah. I learned watching from, my husband's family and from my family what the difference in that did, and what it what brings out on people that feel like they're being left out of something, and they're not. It's just their perception of it. And so yeah, for me, it's just a relief knowing that I don't have to worry, about what's going to
So,
happen for that future.
yep. So you and your husband have a living will.
Trust.
Because which is key, because when you go to Renee and ask questions about this, we've said this before, she is not somebody who just knows of it, like those who can't do teach.
Right.
She is right in the thick of it. She's paying the things that she needs to. She set it up. She knows the situation because she's in it. And so if you're considering, and you should, at least consider living trust, Renee is the person to go to, and she's got the personal experience as well as the education and knowledge for it. So for a living trust, there are so many layers in general.
Mhm.
And one of the things is from what I'm reading right now is mostly it talks about probate and those your beneficiaries benefiting from it and and there's a few other things. So um, one of the things I do know is things become anonymous once they're in the trust.
Mm.
So there aren't the state doesn't know who owns it because the trust owns it. So it doesn't go personal. When like say you're somebody passes and they just have a will, what happens if they say have credit card debt or a loan or other things that are still outstanding because that's how they were living their lives? What happens to that kind of thing? Creditors
Right.
with
Right.
a
I
living.
get, yeah, I understand. Excuse me. Yes, like for instance, with my mom, she did have credit card debt. However, unless your name is on that credit card, you are not responsible for somebody else's debt, regardless of whether they passed, regardless of whether you're their caregiver or anything. So what I did was I had to call the card companies and they would argue with me, no, you need to pay this. And I said, no, actually, it's in my mom's name. My mom has passed. My name is not on this. And so most of them were, okay, and they'd sent the letter stating a couple of them were pretty pushy, with wanting to get their payment. And, I understand that, but I just continued saying the same thing, so that knowing that unless your name is on a credit card, if you're married and your husband passes or your wife passes, yes, you're responsible if your name is on those things. But as far as a trust and if somebody passes and your name is not on those things, you do not have to. The same with medical expenses. She had medical expenses. We didn't have to take care of that because again, everything was in her name. Um, there wasn't an additional thing, a pot of money that said goes out to all, these things to pay off my bills before anybody, gets anything.
Right. But with a will, is that true as well?
I'm not sure as far as I would imagine that with the will, the same thing would happen as far as credit cards are concerned. But then again, the state gets involved. So they might even say, this much has to come out of um this pot of money we have here with whatever was left in the will to pay off those debts.
Right.
So yeah,
I think I've seen in some wills it usually states in the beginning any debt gets paid first
right.
and then the rest goes to so regardless that has to and I don't know if that's credit card
Right.
or loans or anything like that that's a whole other can of worms but the trust helps um insulate maybe
Yeah. Yeah.
kind of that risk
Right.
and there isn't any because the trust owns actually so I think yeah so credit cards have to be in somebody's name
Right.
but if they're within the trust though yeah it's things are a little bit um complicated but once it's set up it makes perfect sense.
Right. And I think that one of the things too is that knowing, because I don't create the trust myself. I get everything together that is supposed to be done for the lawyers that take care of it. And so the lawyers are the ones that we sit down with and discuss what the wording is going to be, all the things that are going to need to be in that, and how that works as far as somebody else's debts. So, but I just know that within the trust that we had with my mom, that it was just basically cut and dry. There was nothing that said, these debts had to be paid for because, yeah, that's it. None of that was in there. And so I think that, with that lawyer, it's the one that says, look, these are things that you're not responsible for, and these are things that you're responsible for. And that goes with whoever is talking, we're talking with the lawyer and saying what we need it to sound like, what we need it to look like, and how it's going to um be split out at the end. What does that look like?
Right. And so you don't need to have a business to have a living trust.
No.
Yeah. So
Yeah,
for business owners, that's one way to help offset some of the things and the liabilities and things like that, to put it
absolutely.
in there. And also, so there are different kinds of trusts.
Different kinds.
There are living trust, there's a charitable trust, there's a family trust, there's all kinds of ones, depending on what your situation is, which ones.
Right.
And what I know is you can stack them
Yeah.
within a living trust.
Yeah, there's so many different possibilities of what to do. It just again just depends on the person, what it is that they have that they want to secure, and kind of go from there. And some people just have some basic things. We got a couple kids, we have a home, we have life insurances, whatever it is that they're wanting to put in that trust. That's
Their real estate.
right, the real estate, those other things, right? And what that looks like, within the family and how, those things are going to be placed out between the family. Um so, it just depends on each individual and what it is that they're looking for in that. And also too, the same thing with the lawyers, it really helps to be able to have lawyers to work with that, know what they're doing. This is what they do,
Right.
and so do the best that they can do for their client also.
Right. So when you set up a living trust, and you don't have to have lawyers uh, necessarily involved, you want them to look at it for sure, but you can and you can't. It depends on how savvy you might be and what you're doing. So there's setting up the trust, and that's the grantor or guarantor, I think, who sets it up. And then there's a trustee, and the trustee could be, are you a trustee in your trust?
Yes,
Okay, so then there's trustees, and we're not going to go into the individual roles because
right,
they can be confusing. Renee can break that down if you want more information. And then there's the beneficiaries.
right.
And are you a beneficiary and a trustee, or you have to be one or the other?
No, in a trust you have beneficiaries. Those are the ones that you're leaving, whatever it is that you're leaving to. And then you have I have my son that is the one that's taking charge over if something happens to
Right.
me. Right.
And then
So,
there's the trustee, and then there's a, I forget what it's called, not a sub-trustee, but basically if you're incapacitated, they step up, and
right.
they agreed to do that. So from the
Yep.
book, this is what I'm getting so
Right.
far. I'm like,
Right.
okay. So now tell me, because I don't have any children, and so there's really no beneficiaries unless I have my siblings or something who may or may not outlive me, who knows? So what about tax benefits? And so if you have a business maybe and set up a trust and then have your family trust within that, or you're just setting it up in general, what help me out with some tax benefits, because that's my main focus.
Right. So I know that with my mom's living trust, my brother was the one that was in charge of, how the money went, blah, blah, blah. And so with that, what we received was tax free.
Okay.
So
So it's when you receive it after the fact,
Right.
So now when your mom's, she had the trust, so I believe they have a life of 100 years or something. And so she passed, her wishes were there. Does this trust still exist?
No, no,
Okay, so
because
it's
she's
dissolved.
passed, and so when everything has been finalized and completed, the trust no longer exists.
Okay. Um, if you wanted to keep it going for family members or something like that, then that would be in the trust that upon your demise, things would be put out and then the trust can keep going if somebody else steps in as a trustee.
You know what? I am really not sure about that piece of it. Again, I work with the lawyers that
Right.
do all the big things in it. So basically, that would be between the client and the lawyers as to how that they want that to be set up. Um, I know just for my mom, it was her and her husband's living trust. He passed, so she had to go in and get it, so that it was just her living trust. And I know that once that was completed, there's no longer a trust in that. So, but they can
Okay.
set it up where, it goes down from family to family. It just
Right.
depends on what it is that you're wanting to do.
Right. And then even for businesses, if you set up a living trust and you're basically you can fold your business, some of the things in there. And so most of your expenses come out of the trust. Obviously, you have to have income to put in it to
Right.
pay for those. But also now getting back to the insurance policies and things like that, you could have your insurance policy within the trust, right?
Yes, you can. So I know that with my mom, she had a couple of different policies, and they were not in her trust, but they were in the children's names. So all the children had to go to the particular bank, and show their ID, and or if they didn't live in the area, there was a process of what they had to do in order to get their share of those. The life insurances. Also, no taxes paid on those life insurances. So
Right.
that's a huge benefit to know, that within those types of things for your family, that the money's not going to taxes, it's going towards your family.
So if they just had a life insurance policy without a trust
Hmm.
and it gets called in, do they have to pay taxes on that?
No, no,
Okay.
yeah.
So that's it. But that would become income into their that they'd have to claim, right? On taxes?
No, it's one of those, like not a loophole, but one of those things that has been set up within the insurance companies. And
Okay.
so that's there are other policies that you do have to pay some taxes on, but within a typical life insurance policy, I know that from my experience was that no, we didn't have to pay taxes on that or the trust. So,
Right. So whether it's in a trust or not, you can borrow money against your policy and then just pay it back. And
mhm,
so, and I don't know how much interest or anything like that, but as far as you can do that at so many intervals or
right,
whenever, as opposed to going to bank and trying to get a loan
right.
and then having those interests and all that kind of stuff.
Right. There's so many different types of life insurance policies. Those that you can borrow from, and those that you just take a certain amount out a year. It just depends on what it is that you're looking for.
Right.
So,
Yep.
yeah.
So the living trust, again, there's more tax benefits on
Yeah.
there, which I'm hoping is the back end of that book that I'm reading.
Yeah.
Because I
Yeah.
keep getting beneficiaries and probate and stuff. And I'm like, that doesn't necessarily apply to me, for where I am in my life right
Right.
now. And I'm like, okay, where's the tax benefit? That's where I want to go. But there's
Right.
also different types of trusts. So I do know of someone who needed to, their spouse got really sick and bedridden, and it was for a couple of years. And I also know from being a primary caregiver for about 14 months of a loved one, um, Medicare doesn't cover a whole lot
Mm,
when somebody's doesn't have their faculties and we need help,
right.
whether it's somebody to come in and sit with them so
Right.
you can go to your doctor appointments, or go to your job so you can afford whatever,
Right.
or just try whatever, or whether it's they can't really go out and we need PT to come in,
Right.
and from also medical supplies
Mm,
and a whole bunch of things. So I found out the hard way that there are limited options on Medicare.
yeah.
So what this other person did with their spouse who was bedridden is created a trust for that spouse,
Mm,
and was able to be to use Medicaid
okay.
because of that. And the money would go in, and then the money towards whatever with Medicaid would come out of that trust.
Right.
But there's so many more options on Medicaid than on Medicare. So instead of, and so that was the right thing to do because they needed the help, they needed the support, they needed the other options that were very limited. So
Right.
doing a trust just for that, there are so many different purposes and reasons. So
Right.
what had nothing to do with probate or beneficiaries or anything. It was in order to get on that program that allowed that person to have more options and better care
Right.
for the bedridden spouse.
Right. And so, and think of that also, that's usually like if they were on Medicare and able to get Medicaid, it's because they are in a very, very low income bracket. And so that will, be very helpful. But that's another reason why, there are long-term care options as far as, getting those types of insurance plans where you actually get twice the amount of money that you would normally get monthly paid. If you're on long-term care, it's twice that usually. And so that's helpful too. But yeah, it's a lot. There's a
Yeah,
lot.
yeah, definitely. So again, this is the reason why you contact Renee and she'll help you weed through things and things that you haven't thought of and you wish that you did later on. You don't want to be kicking yourself. So let's, uh, before we wrap up, if you could snap your fingers and change, I don't know, one single thing about how the average person approaches their money, what would it be, and why is it the first thing you go over with new clients or somebody who contacts you?
Well, I think that, I mean, most people think that, I have a job, I'm earning an income, I can pay my bills, and well, I have extra money left over to go out. But is in looking at what your money is doing for you, is it actually helping you or hurting you? So, are you taking a look at how to manage your money or is your money managing you? So, I think that's the big thing that what I do first with people is really make them um, take a look. And it's a hard look. Most people don't want to do this. And, that's like, the last thing they want to do. And I totally understand. I get it. Um, but, that it's important because you're working for something, you're working for a reason. Think of what that reason is. Is it because, you're wanting to take care of your family? Is it just to, live every day? Have you thought about, your retirement? Because those things will happen. And if you're not ready, it doesn't mean that that's going to stop. It will happen. So, to focusing on those things, focusing on the reality of what that means for you and your family.
Right. Okay. And so if anybody is looking to get a hold of you, what are the best ways they can reach you?
The best way is just give me a call. I am generally, I always do my business on Zoom. If I'm close to somebody, then I come and I meet them at their home. But I'm available to speak to anybody at any time, except, don't call me at midnight.
And I always like to text first. So what's the number they can reach you?
209-681-2747.
Great. And I believe if they are a little shy, they don't want to text or something, they can email you too.
Yes.
And that is, you've got a Gmail?
Yes. r.c.lawrence123 @gmail.com.
Great. And I highly recommend you just contact Renee, um, send her a text, do something. If you're in the area, I know she goes to a lot of networking meetings.
Yes.
So if you're in the area, you see her or just want to get together, maybe for a cup of coffee or something like that. She's very friendly and she is more than willing to talk with you and see what's going on and see where she can help.
Absolutely. Yes.
Well, Renee, thank you so much for sharing your financial wisdom with us today. I'm always amazed at how much value our local experts bring to the show. And for those of you who want to take control of your financial future and be more secure, you can contact Renee again at r.c as in Charlie dot Lawrence Lawrence 123 @gmail.com or text or give her a call at 209-681-2747. And remember, the number doesn't matter. It doesn't need to be local. We all have cell phones and we've all moved around, so it's all good. And for every conversation I have, it reinforces that each local business owner represents a unique journey that adds so much to our community, and these stories deserve to be told. And if you enjoyed this conversation, subscribe to Colorado Springs Town Tidings at cos.towntidings.com for more insights from the entrepreneurs and professionals shaping our region. So I'm Sandy Bobal-Zuniga, celebrating our city one business at a time, and I'll see you next week. Thanks, Renee.
Thank you.